Hello, everybody. Welcome. This is Wiley Solution Walkthrough Accounting Tools for Business Decision Making. This is the 8th edition, exercise 1816. Textbook authors are Paul Kimmel, Jerry Weingett, and Jill Mitchell. The question used in the presentation is copyright 2022 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. The presentation is copyright 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky, not the authors of the textbook or Wiley. Okay, so coming over here, we've got Yams Companies. Reports the following operating results for the month of August: sales, variable costs, and fixed costs. So let's chart this out. Okay, so right over here, we're going to have sales. And let's make this a little bit nicer. Let's do some wrapping. Okay, so we got sales. Variable costs, and then contribution margin. Units per unit total. Okay. Okay, so if I had 5,000 of unit sales, that means my per unit must have been 80, because the units times the per unit is going to give me my total amount. My variable costs were 240,000. That means it was also at 5,000 units. So my per unit over here is going to be at 48. Means my contribution margin at 5,000 units going to be at 32. So it's going to be 160, or I can take 400 minus 240 gives me 160. Okay. Now over here, my fixed costs. So my fixed costs are at 90,000. Okay, so my net income is going to be 160 less 90, or 70,000. Okay, so this is what they have for the month of August. And let's go through and see the alternatives. Okay, so alternative one, if we increase the unit selling price but 10% with no change in variable costs, fixed costs, or any units sold. So what's going to happen now is that this is going to go from 80, right? So this is at 80, 10% increase, or 80 times 0.1. So this is going to give me 88. Okay, so this is now going to be 88. And so by going through and doing this over here, this is alternative one. Okay, with no change in anything else. Okay, so next one over here. So this is right now doing pretty well. Let's go ahead and look at Alt 2. Okay, so Alt 2, and let's go make sure we have back to the original scenario. So our original scenario is 80, 48, and 32 with a net income of 70. And here we are now. Okay, reduce variable cost to 55% of sales while holding fixed cost, quantity, and unit selling price constant. Okay, so if my variable costs are right now at approximately 60%, right? In order for these to be 55% of sales, right, this is going to have to be 400 times 0.55, or 220,000. Okay, so at 220,000, right, my sales aren't changing, my units are not changing. So I'm holding fixed costs still at 90, quantity still at 5,000. And then over here, we've seen a slight decrease going from 66 to 55% of sales, 60 to 55%. And then the unit selling price is remaining the same. So compute the net income under each of the alternatives, which action will produce the higher net income. Well, by doing alternative one, you're getting the higher net income because you're increasing the sales price by 10%. So that is exercise 1816. I want to thank all of you for being here. That's probably one of my shorter videos. So I probably need to start singing us. No, I don't. Anyways, thank you, Wiley. Please don't forget to like and subscribe. And I look forward to seeing you on the next video. Have a great night, and I'll see you soon.